Welcome to the Red Cloud Research Roundup, hosted by Red Cloud Financial Services. It is September 5th. This week from the Red Cloud Securities research team, mining analysts Timothy Lee and Koby Kushner are joining us to discuss the major events of last week in their covered universes. Tim, take it away.
Hello, and thank you for the warm welcome. This week I will talk about Southern Silver Exploration Corp, that's SSV on the TSX Venture Exchange. Southern Silver is a Red Cloud investment banking client. Last week, Southern Silver reported results from a preliminary economic assessment for its flagship 100% owned Cerro Las Manitas project in Mexico. The study contemplates a 4,500 ton per day underground mining operation with a 15-year mine life. The study features a manageable initial capex of $341 million, all amounts in US dollars here. Annual production would average 12.7 million ounces of silver equivalent, including 5.3 million ounces of silver in concentrates. All-in costs are estimated to average $13.27 per ounce silver equivalent sold. The result is an after-tax NPV 5% of $349 million and IRR of 17.9% in the base case. Increasing metal prices by 15% yields an after-tax NPV about 61% higher, with an IRR of 24.4%. Overall, this is an important milestone for the company, and these are solid results. The PEA yields positive economics in the base case, with strong leverage to commodity prices, particularly silver and zinc. We also note that this project has several other advantages, including its location within an established mining area of Durango State, and good access to existing infrastructure. We have updated our model with numbers from the PEA. The net result is an upward increase to our target on SSV to 85 cents Canadian from 80 cents previously, and we maintain our buy rating. Looking forward, we expect drilling results from both Cerro Las Manitas and the Oro project in New Mexico to be key drivers in the coming months. Koby, over to you.
Thanks, Tim. I do want to discuss Bradda Lithium. That's BHL on London's AIM exchange, and it is a Red Cloud banking client. Bradda reported some positive follow-up met test results from its Basin East lithium clay project in Arizona. The company has been able to pre-concentrate its clays to 1900 ppm lithium. This is a 26% improvement over the previous results, and it was achieved by rejecting about a third of the unmineralized waste material using cyclone classification. This should bode well from a processing standpoint, as it is expected to translate to a smaller plant footprint and approximately a 25% reduction in acid consumption. The next processing step would be to leach the clays using sulfuric acid. Now, acid leach is expensive because manufacturing the acid is an energy-intensive process, and so a reduction in acid should bode well economically. It does also add confidence for Bradda's OPEX target of $4,000 a ton LCE. The acid leach test results demonstrate over 98% lithium extraction within an hour. The company is planning to investigate the recovery of co-products. Met testing is ongoing with larger clay samples, with the aim of producing a lithium carbonate product, which we expect could help attract off-takers down the line. We expect the upcoming PEA to better quantify the effect of cyclone classification. The PEA is expected to begin next year. Now, taking a step back, the company has 305,000 tons LCE at Basin East. Management is hoping to grow this by year-end by drilling the Basin North and Basin East extension claims. The consultants who prepared the resource put out an exploration target across Basin for up to 6 million tons LCE. Should Bradda achieve just 2.5 million tons, then Lithium Royalty Corp will owe them total payments of $5.5 million US. We think Bradda is an interesting story. It's one of the few lithium juniors with exposure to the three primary sources of lithium. That's clays, brines, and hard rock. And we believe there's lots of ways for this company to add value. We think the resource growth at its clays more than backstops its current valuation, while its other projects present free upside. Meanwhile, the company is drilling 7,000 meters at its nearby San Domingo pegmatite project, and drill permits are in place for its brines in Nevada. Lots to look forward to with this name: drill results from multiple projects, resource updates, a Toronto listing, and on our last webinar, management hinted at maybe dusting off some of its lithium petrobrine assets in Texas and Pennsylvania. So expect lots of news flow ahead.
Thanks for listening to the Red Cloud Research Roundup. Remember, you can join us every Monday for new episodes. And as always, you can head over to redcloudsecurities.com for full disclosures. and to sign up to our email list. If you liked what you heard today, please subscribe and leave a review. That's it for this episode, and see you next time.